As we see more brown shoots, more signs of a slowing economy, it becomes more likely the Fed will cut interest rates, and if rates are headed lower, well, you might want to consider owning a real estate investment trust. Take Federal Realty, long our fave, which owns lots of mixed-use properties, primarily in rich suburbs. This is an incredibly consistent operator, even during the toughest times, the toughest. It caters to high-end tenants, which are holding up much better than low-end retailers. Now, last Thursday, Federal Realty reported a solid quarter with inline funds from operations, the real estate, it's the equivalent of earnings. And talk about excellent leasing activity. Wow. Everything's pretty much filled. The stock initially got dinged. People don't understand how this company works. Don't take it from me. Let's go straight to the source with Don Wood, the CEO of Federal Realty Investment Trust. Mr. Wood, welcome back to Mad Buddy.
Jim, it's great to be here. Thanks for having me, man.
Don, when I read through it, it was just a classic Federal Realty call. You've got almost no vacancies. Where you have vacancies, you're obviously going to make more money than you were. It's just a consistent moment for you.
It's about being consistent, and the question of, do demographics matter? Because I'm not sure they mattered all that much coming out of the pandemic. Right. There was an awful lot of government stimulus. There was an awful lot of artificial things after you locked people up for a while to have them come out and spend and stuff. Now we're in a period that's post that I think is more normal,
right,
if you will, and I actually feel very good about the future. Let's see what happens, but we're in real good shape.
Okay, but you also make a point. Look, there are outfits that are not doing Express. You said Big Lots, Joann's, Family Dollar, which is interesting because they have to close a lot. But they're not yours. That's not who I find at Federal Realty.
Yeah, let's talk about inflation for a second.
Yes, let's do that.
Inflation is not an equal opportunity effector.
Okay.
Just about everything that you spend money on today, that I spend money on today, that everybody does, is 30% more than it cost in 2019 or something, right? So if you're that retailer, whoever the retailer is, your labor is up higher, your cost of goods are up higher, your interest costs, your money cost is certainly up higher. The question is, are you able to pass that on to the consumer?
And you say point blank that your people can.
That's the difference, and that's why I really do think it's a big difference, because the companies you're talking about there cater to a lower-end customer. Not a bad thing, just a tougher thing if you're trying to produce consistent results through ups and through downs in a cyclical, economy.
I think the term shopping center, I know we have to use that. It's not shopping mall, but shopping center does not define Ballackinwood, where my father's from, and it does not define Santana Row, where my fabulous producer, Reggie Gilden, and I recently had a couple of margies.
I hope.
No, never. But what I wanted, but people have to understand is when I'm sitting there, I'm looking at office, I'm looking at residence. This is not your grandparents' shopping center.
No, this isn't. These are communities. These are neighborhoods. These are the realization that outside of the central business districts of America's best cities, there are suburbs that are close in that can provide the entire experience for consumers who today especially work from home, and after COVID, they don't want to sit in traffic. They don't want it. They want the amenities that they could get in the city. They want to be able to live in a really nice place close to where they work, in some cases with mass transportation when that's there, and have it all. And today you can have it all in select locations.
Well, I want people to understand this is not a sales pitch by Don Wood. If you go to one of these, what you realize is they are coveted. The retailers covet, the residents covet, the office company, like a Cisco, which is replacing Spunk, they covet it.
Yeah, there's no doubt that when you have a place like this, first of all, they're expensive to build. They're expensive to do. So they have to draw from more than 2 or 3 or 4 or 5 miles. They have to draw from larger areas. Right. And when you have a more regional location like that, it also allows you a much broader palette of tenants that you can bring in, both especially on the retail side, because I'm a retail guy. We are a retail company through and through. The idea is to make that ground floor as exciting as it possibly can. Then you can talk about living there or working there or staying in a hotel there.
But Don, you mentioned this is not the time for you. You're not starting some new big projects.
No. Listen, every part of real estate has its cycles, and there are times when it's better to build stuff, and there are times when it's better to buy stuff.
And to sell some stuff. You've got, $400 million on that you're willing to part with.
Certainly to sell some stuff in in order to buy more raw material. Because
Right.
what we like to do is take undermanaged shopping centers and take shopping centers that haven't been invested in, if you will,
Okay.
for the last 20 or 30 years, because then we can work our magic. That's what I love to do, and that's
Right.
our company's really good at it.
No, we had Tanger on. I know you like those guys,
I
and
do.
they're looking at the Huntsville and the Asheville and the Nashville, the Vills, but you're really a coastal guy.
Well, yes and no. I do think that COVID has changed that a little bit.
Okay.
I do think there are certain markets that are better. I was just on a panel today with Steve Yeloff of Tanger.
he's a fun guy.
I think, and I said to him then, and I'd say it again here, I think he did a great job buying Huntsville. It was a bit too small of a market for us. We looked at it. But for what he and that team is trying to do, I think they're doing a great job. This is my commercial for.
No,
for
I
Tanger.
know. You're a great spokesperson for your industry. You got me even to see David Simon from Simon Property. You also had a good quarter.
Another
Gotta
good
like
man.
David. He's a good man. But anyway, that's Don Wood, who's the CEO of Federal Realty Investment Trust. And I can be as ebullient as I like. Why? Because he's made money for us even during the down days. I like to say there's always a bull market. Some of my prompts are just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. This call starts now.